how do you see the shale landscape changing in the USA?
I think you'll see a lot of consolidation. A number of people went into the shale markets at boom time. Some of them paid heavily, signed heavily overpriced contracts for acreages for drilling in the US that didn't have very good prospects. So what we'll see, we'll see a lot of the froth go out of the shale markets. You will see a number of these smaller independents come together. There'll be some consolidation, but they're here to stay. And what we'll then notice is that in terms of the technologies being used stateside, whether we're talking, it may come as a surprise to some of the viewers of this broadcast that there's a lot of digitization in the oil and gas business. There's a lot of robotics. There's even artificial intelligence. Essentially, what these guys are doing is they're bringing all of this together with one sole purpose, that is to bring their drilling costs down. They can never replicate the drilling costs in Saudi Arabia or Kuwait, where labor is cheaper for starters. So the Saudis can actually produce oil at $8 to $10 a barrel and still make money. You cannot replicate those costs in the States, but what they're trying to do is mitigate against that and try to automate some of the processes, to modernize their drilling processes. And by some measures, drilling costs in the States have almost halved. Drilling times have almost halved. And the way I see it is that even if oil bounces back, a lot of these guys are going to say, no, we're not going to get rid of the efficiencies. Efficiency drive is a one-way street. You've achieved those savings, you will stay there. So I would say that there'll be a lot of consolidation in the States, but a lot of these parties will remain in the game.
Is it true that given the depressed prices of oil, that any investment in oil and gas is on the decrease as well?
2015 was a particularly bad year for the oil and gas business. Every quarter we saw somewhere in the region of $230 billion worth of final investment decisions, the FIDs, not just by the international oil companies, but also by a number of the national oil companies, being what is described in the industry and elsewhere as being put on ice. That's not to say that those projects would have been cancelled outright, it's just that people have put it forward. There's also another very sort of silent change that's happening in the background. A number of huge oil companies were getting rid of their refineries, their refining and marketing assets. Suddenly, when oil became cheaper, and oil is the raw material for these refineries, and that's how it reaches our cars and so on, these refineries suddenly started to turn a profit. So one thing that certainly happened in wake of the oil price rise was that a number of big oil companies stopped selling their refining assets, and a number of them also decided to just put their projects on ice. What's happening right now is that we'll continue to see lower investment until the industry works out what is the new normal and invests on that basis.
So I was going to ask you, what's the consequences of this for the future?
Well, nobody has a crystal ball, but if you look at on a 5-yearly basis, and let's see how the next 5 years are going to pan out, I would say we'll continue to see stunted investment for better parts of 2017, because 2017 is likely to be the year where we will see slightly, at least in my opinion, we'll see slightly less volatility than we saw this year in 2016. So on that basis, where I would say, what I would suggest is a number of these companies will take stock, and from 2018 onwards, we'll see the investment levels gradually creep up.